Ramesh Damani caught up with Sunil Singhania, the CIO Equities at Reliance Mutual Fund, to dissect the science behind the best stock picking philosophy. Let's hear a chunk of that conversation.
You said you prove the honesty of management. How do you prove that?
So one thing is, I'm a balance sheet believer, and I think in balance sheet, 80-90% you get an indication.
Numbers don't lie.
Numbers don't lie, whether the company has been raising capital very frequently or not.
Dilution equity is a red flag.
Yeah, then cash flow. I think you can show as much profit as you want, but if there is no cash flow, there is no use of profit. So that becomes a key indicator. I think sometimes, sundry debtors, inventory, working capital cycle, unnecessarily bloating of, gross block. I think these are all signs where you sort of make out. And if the payout is very minimal, if the company does not require it for growth, you hear the bells ringing somewhere,
You also look at global companies, right? Why do you do that?
We invested in the largest liquor company in India, United Spirits, and it turned out very well. And it was very simple analysis which we did. So we track around 2,600 companies across 20 countries on a passive basis. In one of the presentations, we found out that the market cap of cigarette companies globally was significantly lower than the spirit companies in each of the markets. In India, the largest cigarette company is trade at a market cap of 40 billion. And the largest alcohol company is trade at a market of 1.5 billion for all obvious problems.
Yes.
And our thought was that if the problems got sorted, we would double our money. But if it would not, then we would quadruple our money.
Right.
And if you actually see, 15% of the world population, 50% market share. So technically, you have 7.5% of the world's market share in the fastest growing alcohol market. And it was not a very, you can say, simple, fundamental sort of buy. But it was a good way of at least having a thought, and it worked out well.
They say in cricket that fast bowlers hunt in pairs. Are Madhu and you like that? I mean, you go visit companies, the 1-2 punch, the big picture, the numbers guy. Was it like that?
I think it worked out well. So Madhu is a very passionate guy, believes in instinct. I'm a very number-focused guy. So I think it works out well, And I would say very clearly, I'm very, very cautious buyer. And I think somewhere down the line, even if you find stocks, if you're not able to buy, it does not work. So I think that is where Madhu's strength comes in. He's been in the market.
Able to close a deal.
Able to close a deal, be a little bit pushy. And I think from my side, wherever I feel that the numbers are not matching the broad picture, I think one thing we have to remember that it also makes sense to avoid making mistakes. So, we all talk about how we pick stocks. We never talk about how we avoid stocks.
I think Rule number one, don't lose money.
Yeah, that is the biggest thing. Otherwise, you won't have money to invest.
That's a great point. Another stock that has been well associated with your house has been DB's Lab, the pharmaceutical space. Even today, a lot of excitement. What was the story behind that?
So again, this is a company which has never raised equity at all. In fact, the IPO was also offered for sale because of a very early stage, dilution they had done to a private equity guy. After that, the company has never ever diluted money, raised equity. And if you see the amount of dividends they have paid almost 2,000 crores of dividends since their start of their life. Even now, they are continuously growing at 20-25%. Very high, very high ROE, very high quality management, very high quality company.
When you walked into the company, did you know that this was a special company for you?
As we started meeting them more and more regularly, the confidence levels improved dramatically.